This financial literacy video is brought to you by Young Kings and Queens in partnership with Comerica Bank.
Good evening, everybody. Good to see you again with Young Kings and Queens hosting some financial education for everybody. Again, my name is Mike Marler. I'm with Comerica Bank. I'm an external affairs market manager here in the mid-Michigan region. So this topic today is budgeting. Topic just like last week. It's a foundational topic that will help you be better prepared for your financial life. It's something that we don't talk about enough in the world because it has so much importance. So I'm going to start sharing some slides. We're going to get going. If someone has some questions, if you can type it in, Takesha might be able to see it through the Facebook because we're broadcasting on Zoom here, so I won't see it. And if you're on the Zoom with us, then go ahead and type it in and I will try to answer your question. And I appreciate you being here again this evening. So here we go. And we are sharing. All right, give me a second here. I just need to kind of get the little, yeah, just gonna leave it. All right, so today we're talking about budgeting. And in the workshop, we're going to explore the importance of creating and maintaining a budget. And I will tell folks all throughout this program, I'm great at creating a budget, all right? The problem is I seem to always find this pencil or pen and I poke holes in my budget as I create it farther down the line. So hopefully when we get done, you have a good foundation and you won't poke holes in your own budget like I do. Of course, we're going to talk a little bit at wants and needs, and some things I think are more needs now than our wants. Some things that change in categories because we've had changes in technology. Of course, an idea of setting some spending and savings and debt repayment goals, because we talked about debt last week. This week, we want to move that topic into that budgeting aspect to help drive down that debt. So that gives you an ability to be better prepared for emergencies in your life. So we're going to use Marta. She's going to be our subject for this evening. We're going to talk about Marta quite a bit. She's a middle-aged person. She's working 2 jobs, as you can see here, and a hostess at a restaurant and a grocery store. And she feels overwhelmed by her debt. She pays her bills late in the past, and she really feels like she needs to figure out ways to organize herself because she wants to become more financially stable. And that should be your same goal. You want to become financially stable. So let's break Marta's income down. She makes $2,000 a month in net income. And that's a big difference. Think about these things. When you look at your paycheck, you see 2 different lines. You see a line of gross income and a line of net income. Of course, your gross, as you know, is what you get paid before you pay everybody else for your taxes and your insurances and things like that. The net is what you're going to live on and you need to create your budget with. So she's going to need to make a financial plan in a budget which has savings involved with it, and then help live within her means, meaning she's not robbing Peter to pay Paul because she's in between pay periods and she needs to make a payment of a bill. And then she also wants to systematically, that's a key word here, systematically reduce her debt. And I just talked about this, the difference between gross and net income. And you need to really think about that. Everybody talks about gross. And I always tell folks, remember, you only live on net. I always like to say, I wish I lived on my gross, but I realized the true fact is after I pay taxes, I pay my medical insurance, dental insurance, vision insurance, I have a net. So it's always good to start out with the definition of budgeting. It's a process of creating a plan on how to spend your money. And of course, we know how it's going to help you in the future. It's going to help you live within your means. It's going to help you pay down debt. And of course, it's going to help you save for future goals and emergencies. Because goals and emergencies, sometimes you think they're the same, but they're actually separate. I want you to think of them separate when we get farther down. So here we have a list of Marta's wants and needs. And you can see it's broken down. It's just lists, you just write it down. And I would challenge you when you're creating your budget to sit down and just before you get to the wants and needs section, write everything down, however you're spending your money. The key component is if you're not keeping track of how you're spending your money, it's going to take a few minutes to sit down and do that. I have talked to people and recommended that sometimes when you're not organized in knowing how you spend your money, to buy yourself a little 3x5 notebook or notepad or something you can write with, you can throw in the car. So when you stop at the gas station, you pump, $40 worth of gas in your car and you walk in, you get a pop and a candy bar. You just don't write down the gas. You write down the pop and the candy bar because that is the leak that I always seem to have in my budget. It's not just the gas because I budget for that. It's those other things that happen to be at the gas station I like to get. So write down those wants and needs. You just put them in there in a column. Don't think about where they fit yet. Just write them down. And some things you might think about, well, I don't pay for it, like for car insurance. You may be paying your car insurance every 6 months. Well, you need to figure it out in your budget on a monthly basis. So you save up an amount every month for 6 months to make that payment on time. That's an important piece of the puzzle when you're creating this, is if you have intermittent payments in a 6-month period, you need to make sure you include them so they're part of your budget. So when you are listing your stuff, like I said, you're going to create a list of what you're spending it on and how much you spend with it. So that's where that little notebook will come in handy, because all of a sudden you buy $40 worth of gas every week. In 4 weeks, that's $160. But also at the same time, you're spending an extra $5 to buy your candy bar and a pop. And so all of a sudden, that's an extra $20 that you had not budgeted in your budget that you need to have in your line items as you create it. So then once you get that, you break it down into wants, into needs. And you look at it, and some people will say, well, I really need coffee because I can't function without it. So I would not argue that point. I would ask you, if you're spending $6 for a latte at your favorite coffee shop, could you not figure out how to create or make that same latte at home with a can of coffee that you can purchase and make yourself and take out the door in a thermos? You would, instead of spending 40, you might spend 20, and there's a $20 savings amount that you're thinking about. You might try to figure out how, instead of going to the restaurant, for a steak, you might buy 2 steaks and have 2 meals for the price of one at your home. Entertainment, clothing, you can always, I always tell folks, instead of spending $200, try to spend half of what you're spending in clothing. My wife would tell me that the salon is a non-negotiable. It is what it is, and it's in the budget. And so you might have something like that in your budget that's a non-negotiable, that's a want. So that's okay, because you need to have a feeling of being successful when you're creating your budget. And if you strip everything out of it, you don't leave some money in there for you, you will always figure out ways, I hate to say this, but to bust it, because you will fulfill those wants without budgeting for them. Of course, put down your needs, your rent, your grocery, utilities, car payment, car insurance, health, medical insurance, if it's not already taken out of your paycheck, internet, phone payment. If you got a phone on a plan, put that in there. I will tell you the phone is a need. It's not a want in today's environment. The phone I have is as powerful as my computer when I bought my computer back in 2010. That's how powerful phones have become in computing power. They're significantly important in our lives for conducting stuff. I mean, you can bank on the phone, you can send money to a friend on the phone, they can send you money, of course, emails, all that kind of stuff. It's important to make sure you have those plans in place in your budget. So, of course, my challenge to you is, how are you going to free up some funds? And that's the difficult. What expenses can you cut? So as I was talking to my son and he was building his budget, I challenged him. He likes to play a lot of games on the internet. I said, how many hours do you put into those games? And say he had 4 or 5 of them, and he had 2 that he might have spent only 1 or 2 hours a month on. I said, if you cut those 2 games out, there's another $20 a month in your pocket for something else. And he agreed. He wasn't getting the value out of the games that he was paying money for in this instance. The other games he kept because he was playing them at a significant higher rate to make it the value meet the expense. Or you can look at, if you have Hulu, Netflix, Apple, Prime, Peacock, Paramount, how many different networks can you have? That's almost like you've created your own cable company. So now you're paying about the same time. So now keep track of how much time you're spending on each of those platforms. And if you're only spending a couple hours a month on it, maybe think twice about having and cut back on it. Again, that's hidden money that you could put back into your pocket because it's easy to sign up for this stuff. Remember, they get you in free month, but you got to give them all your credit card information and you don't even think about it. And then the next month you see a bill on your credit card statement and you go, oh yeah, I should cancel that. But things get in the way. It's real easy. And you say, I'll take care of it the next month. And I'll take care of it the next month. The next thing you know, you've got a whole year and it's an extra $100 or more that you spent on one of these networks that you're not really watching or watching at all. Of course, shop for services. Everybody says the biggest way to look for services that you can save money on is, of course, in like car insurance. It's always good to shop, but also make sure you get a good, strong relationship when you're shopping for services, because you don't want to be go to the lowest provider if they don't provide you a service standard that's acceptable. Everybody can go to the lowest cost provider, but if they don't provide you any service, are you better off? Sometimes I always say it's better to spend a few pennies more to be able to solve an issue later, in the future. Whereas if you get a big problem and they won't talk to you, then you're going to have to spend a lot more money to fix an issue. Of course, it said, think about a new job. Now is a great opportunity to think about a new job. Write down your skill set. Think about what you're really good at, what you really want to do, and go out there and look to see what is available. They'll be amazed what you can find out there. Of course, you can consider freelance or gig work. to supplement your income. I always tell folks, when you start thinking about freelance and gig work, you need to think about the implications of taxes because you're becoming a sole proprietor of your own business. So that's an entirely different process. So it's a good way to increase your income, but you also need to manage that other part of that process. So it's important to understand that, to make sure that you don't have tax implications at the end of the year that you did not plan for. So when you think about this, we have Marta. We're going to use Marta again. I see a chat message. Can I see? I don't see any. Okay. Takesha, I only see me and you looking to be let in.
Okay.
Yeah. Sorry, if I'd seen him sooner, I would be. There. Sorry, I'm going to take a second to get my train of thought back. Take a little drink. So we're going to use Marta again as an example here and list out your debts, credit card, student loan, car payment, anything that you have that you're paying on a monthly basis. List out the balance, list out the interest rate. Also write down next to it if it's fixed or variable. It's an important thing to think about as you're planning your budget in the future. So we're going to talk about, we talked a little bit about this last week. We're just going to go back to it, and it's debt management strategies. And there's two strategies that are recommended. There's more, but these are probably the two that are used the most. One's called the avalanche method. We'll go over that one first, and then we'll go over the snowball method. The avalanche method, you want to list your credit card and your debt based on highest to lowest rate of interest. So you're not looking at your balances here. You're looking at your interest rate over here. You want to figure out, here, first credit card's 23, the second one's 18, the student loan's at 12%. So not looking at anything else, just at the interest rate. And of course, then for item number 2, the card B and student loan, you're going to always pay your minimum balance. You got to remember, you're paying your minimum balance to do what? To protect your credit score, because that is the biggest thing that will help increase your score, is always paying your credit on time. And the idea is then to take your extra money that you found through your budgeting process and use it on card A to pay it off first, because it has the highest interest. When it gets done, you move that money down to B. And when that's done, you move it down to the student loans. The other option is the snowball method. And this is the one I like the most because what it does is I feel it gives you a good feeling of accomplishment when it happens. So in this case, instead of listing it by your interest rate, you're going to list your debts from smallest to largest. So here it would be 300, 400, and the 7,000 listed up. Not looking at the interest rates. It's important to know what they are, but putting them up by smallest to largest. Again, you ensure that you make sure you make minimum payments on all of your other debt. Then the idea is to take that excess money out of your budget and put it on that $300. So you're making 50 on the payment 2, 75 on payment 3, and you're going to put 150 on payment A. And since it's 300, it'll take you 2 months to pay that off. Now you can take that 50 and the 150, you're going to pay $200 on the 400. Or right now it'd be 350. So now you're going to, you're going to make that extra payment, make that extra payment. Now you've paid two things. See how easy you're able to feel good because you've eliminated two debts in a fairly short period of time, because you've had the ability to snowball your money into a bigger snowball as it travels down the hill to your lowest debt. So the idea of creating financial goals is to make them personal. If you make them personal, you'll have, the old saying, you'll have some skin in the game. So there's kind of three types of goals you want to think about. And again, like I said, you want to take that emergency money and keep it away from these short-term goals. Short-term goal is something you want to think about. You're going to save up for a few months to 2 years. So something you want to purchase or do. So say you want to do a vacation. Example, I saved up 2 years towards a cruise. So I saved up, and then I was able to make my purchase of the cruise because I had saved. I knew how much it was going to cost, and I put that money aside every month in a little bank to make sure I didn't touch it. Of course, medium goals, 2 to 5 years. So you want to think about say you're going to replace a car, in a couple of years. You don't really want to buy a car right now in today's market, but in 2 years, your car that you're in is going to be time for replacement because you're at 200,000 miles. And it's time to, move on to the next car. You've got good use out of that. So you want to put some money aside, and you're not putting a full car payment. And if you had, that'd be great. But you might put $100 a month. So that way you have, say, $2,000 to $3,000 saved towards that car purchase as your down payment. And of course, long-term, longer than 5 years. So that could be like a house in 10 years, or it could be retirement, which is 30 or 40 years out. Remember, when you do long-term goals, especially like retirement, there's, this formula is out there. You got to remember it's based on risk factors and tolerances. But if you can save $2,000 a year for 40 years and put it out into an investment that will earn you 10% as an average across those 40 years. So that means maybe 1 year you get a -5, and another year you get 25%. 1 year you get 7, and another year you get 12. When you average them out, you get 10% over the life of that investment. You've saved $80,000, and the math says you'll end up with $1 million. That's not a bad return on your money over a long period of time. The thing is, you got to remember to put it aside and not touch it. That's a hard thing to do. Remember, while you're doing this, you need to figure out a way, hopefully, to put a little bit of money to the side for emergencies. Statistics say right now that 40 to 50% of the population cannot get their hands on $400 to $500 in cash for an emergency. That's a lot of folks who do not have access to cash, which is, I think, just amazing. But it's the way it is because we're all living from paycheck to paycheck. So remember, you're going to make these goals personal because they're for you. I can't do it for you. And this will help drive you to be successful. Because when you attain one, now you're looking to attain 2 and 3. So we get into the budget now. Excuse me. And so we're going to focus on a budget which is called the 50-30-20 rule. And they're going to have categories in the method here. So what is the 50-30-20 rule? 20% of your money you're going to put into savings or debt repayment. 30%, no more than 30%, you're going to set aside for your wants. And of course, 50%, you're going to set aside for your income towards needs. Now, I will tell you, when you're creating this and you're looking to create this, you can use an Excel spreadsheet. It's really easy, or write it on paper. I use paper all the time when I did this. So if you think about it, at $2,000 in Marta's example, $1,000 is going to go towards her needs. 500 is going to go towards, not 500, 600 is going to go for wants. 400 is going to go for savings and debt repayment. But when you put this down, depending upon what your rent looks like or your mortgage payment looks like, may make that 50% change a little bit. Well, if that 50% changes, you have to make changes in these other two categories percentage-wise. Because you really can't, if you're living and renting somewhere and you like where you live, I'm not going to recommend that you go move to a location that you feel uncomfortable to. That's not going to, help you in the long run if you're uncomfortable living in a location. You're better off making an adjustment over your wants or your savings, unfortunately, to be comfortable, sound of mind, so to speak. So creating that budget, using that percentages as you move along. So here, they wrote down her needs, her wants, and her total debt, and her savings. And she did start putting money aside to save, even though she struggled looking at this. If you look at it, her rent came down. Again, I said, if you can't make the rent come down, you have to figure out other ways to save. She cut her expenses in groceries. She might use more coupons or maybe a shopping club. Utilities, that's a hard one. All I can say is turn off your lights. I hate to say this, do 5-minute showers. I've gotten to 5-minute showers to save, a little bit of money, and I'm notorious for having long showers. Car payment, you can't change that. Car insurance, you might be able to drive that down if you do some shopping. Transportation expense, to me, that means gas. Unfortunately, if you think about it, we might have to put more money in this budget because gas prices are going up. Internet, the only way to look at is look at your plan and see what it's doing for you. If you need to have a certain speed to be able to do your internet and do your things that you do at home, I would not change that, because the only thing I can remember is dial tone. And as you know, you're probably all laughing right about now. Dial tone was notoriously slow. So if you look at the wants, you can see that she cut her coffee in half, but she didn't change her restaurant or eating out. She still wanted the $50. Her entertainment stayed at $40. She did cut her clothing costs down to $50, and she did cut her salon costs down to $50. Like I said, in my household, that's not going down, that's staying the same. And then she built her plan to figure out how to make those payments and continue paying them. Now, in the categories method, it's more along the lines, 30% is going to housing, 10% to utilities, you're going to do 10% to groceries, 10% for transportation. You can see the percentages that they're using, and you can change these percentages. Just got to remember, they need to be at 100 at the end. So if your housing is at 40%, that means you have to figure out how to take, 2% out of some of these other categories to get to that other 10 here. So instead of 10%, that would be 8 for groceries, maybe 8% in savings, 3% in dining out, 3% in clothing. Looking at it that way to help build that budget in this categories method. The other one I think is a little bit easier to do and easier to manipulate to make it work. But it only works is if you put all your stuff into your budget. Once you do create the budget, if you go out and go to the hardware store, I'm notorious. I like to go to the hardware store and I can always find a new tool. Boy says I got more tools than I know what to do with. But I find a new tool and all of a sudden my budget has a new hole. So you see her budget after she made all those cuts. And you can do the same thing when you sit down and plan it out. It's being systematic about doing it.
You're back.
Sorry, it popped up, said it was unstable.
No worries.
So I'm sorry, go ahead.
I said no worries. We can hear you now.
Okay. I'm checking out, see anybody up there waiting to be in. So, we're going to talk a little bit about strategy for savings. It's really hard when you think about it. Again, I use the word systematic. Small steps create great results. So it's not about saving a whole bunch at once. It's about saving the same amount on a regular basis. So if you have, if you have the ability to say, take $20 out of your paycheck and put it in a savings account, and you can do that, that's a good way to systematically take 20 out of every check and set it aside. And now once you don't see it, you think of it as your check now being $20 less. So that's your new net income that you're going to live off of. It's also automatic. You want to make sure it's automatic to help you. And of course, if you're spending less, to help make your savings goal will be easier if you can cut a little bit in each of your categories that you're looking at. So we went through a lot, and we're going to do some more next week. So this is not quite as long as most of the other ones. So we went through a lot of strategies for budgeting. We talked about the 50, 30, 20, method, or the process, or the method with the different categories and percentages. How to systematically approach your debt and consider strategies to reduce it. And it's okay to talk to somebody you trust to help you work on this. Advice is always good because we want to make sure that you're successful. And so, Takesha, that's the end of today's session. It's only really about a 40-minute session today, and so I don't know if you have any questions, or if if anybody's asked you any questions.
So I haven't seen any questions as of yet, but I would say that everybody should find the right budget that fits them and work it to just simply be out of the deficit, not in the negative. And these were some pretty good points. And the real numbers are more alarming, like when you look at what the rental rates really are, and most people,
Correct.
right, aren't really netting 2,000 a month. So that would make budgeting harder. Um, so I know I have some templates available. I don't know if you guys that you're willing to share. If
I do
they,
not have a template. I do know that you can find, if you just go help me budget as a Google search, there is a lot of templates out there that will help you create a budget.
yep, and be honest with your budget, because that's the only way that you're gonna see a true return on it. Don't just write down the bills and forget that you spend about $200 a month on extracurricular activities. Make sure that you are honest when you are accounting for everything that you do. So I know I
Yep.
have a wine budget, so don't judge me because I know that that's what I want. So I do put that in my budget as I'm calculating my funds. So just be honest
Yep.
and it'll work out best.
It's like, and exactly correct. That is a want that you don't, you build it into your budget. Like I said, my wife's salon budget is in my budget, and it is what it is, and it's not going to change. As much as I want to say, well, dear, $200 is $100 too much. She goes, do you want me to look beautiful? And I say, yes. And she says, then there's no other answer question besides $200. So build it in, like Takesha said. And if you haven't been keeping track, start keeping track as you build your budget. Because like I said, I'm notorious. I go to the gas station and I'll walk out with, besides gas, $10 of stuff. And that's stuff that you don't budget, but it has to come out of something. And if we can control those little impulse buys, you'll be amazed what the results are for yourself at the end. But Takesha, I don't have anything else. So I can let everybody have a few extra minutes in their evening to enjoy this nice weather before it gets cold again, it looks like.
Well, thank you again. Is this week 4?
I think so.
Okay.
Yeah. So I got next week should be making budgets work. So we're going to do some more work with budgets. The week after that, I believe is retirement, which I will be doing. And I think the last week will be with Joe, and I'm not 100% sure, but I want to say identity theft.
Okay. Wonderful. Well, thank you so much for your time. Thank you, everybody, for watching. Those who are watching live, and we'll watch the live after we're done. Thank you, thank you, thank you. Hope it helps.
Yep. And if anybody, send Takesha some questions and we can answer them next week when we get in. See you later, guys.